Good morning everyone and welcome to another RF Crypto video. On today's markets, we see a 2% decline from yesterday, which is mainly stemmed from the fact that Russia defaulted on its foreign currency bonds for the first time since 1918, which is over 100 years ago. We know that Russia was cut off from the global economies through sanctions. However, it doesn't mean that it's fully disconnected from the market. There is some lingering connection, and with news that it's defaulted on its bonds, and Russia being a big player in the crypto industry has an impact on the prices. And we have seen an impact by a 2% decrease in its market cap. But this 2% decrease isn't that much. And that's thanks to the sanctions. And that's thanks to the fact that Russia is no longer sort of connected to the SWIFT system, the big system, and by extent, the global financial system. Because if everything was normal, and if there was no conflict in Eastern Europe, and if Russia defaulted on its bonds, then we would see a much larger collapse of the price of Bitcoin, Ethereum, and other cryptocurrencies. The markets are in the red. It's not much of a change. The coins that have suffered the most are your sort of more altcoins such as Solana and Cardano, and your meme coins such as Dogecoin and Shiba Inu. But the rest of the markets, they're doing pretty okay in my eyes. 2% isn't much. 21,000 is a psychological level, and it hasn't dropped much below that. So I think that there will be a correction in place and the prices will go back to 21,000 and above that. Unless some external shock, a gray swan event or a black swan event happens, then I see the price going up. In terms of the price of Bitcoin, we see here on the charts, if I zoom in a little bit, that the prices were trading at around the $21,300 resistance level, and it dropped a little bit, but it's still above the midpoint between the $19,400 and $21,500 levels. So it is still trading on this upper band, and we still do see a potential for it to break through and go towards the $23,000 level. However, at the moment, it is trading at depressed levels due to global markets performing miserably, and also, as I said before, Russia's default on its bonds. And it's also a fact that people are watching the markets very carefully. They're very risk averse at the moment. They're scared. They don't know where to put their money. And we see a lateral movement in the price of Bitcoin as a result. Because when we're in a conflict and we have a lot of geopolitical, social, and economic risk, we see a lot of money flowing out of riskier assets and into safer assets such as bonds, blue chip stocks, and commodities. And very rarely during a crisis, which we're facing now, do we see money flowing back into riskier assets. So the markets are trading laterally. If I zoom out, we see this massive drop, and then we find sort of a stability towards where people are pricing their risk and accepting the risk at these levels. And since 19th of June, which is about 10 days ago, it has been trading between 19,300 and 21,500, which means the market has found its footing in terms of risk. Tether's CTO, or Chief Technology Officer, Paolo Ardoino, refutes stablecoin FUD, a short seller's circle. He has said that Tether, or USDT, has been subject of a coordinated attack by hedge funds looking to short sell the dollar-pegged crypto assets. So as you know, USDT, which is a stablecoin, is pegged 1-to-1 to the dollar, and it's backed by reserves. And what these hedge funds are basically trying to do is that they're trying to short USDT or engage in an investment strategy betting that the price of USDT is going to go down. And what they're doing is that the hedge funds are borrowing millions in loans. So they're actually taking money that they don't have and shorting USDT since it's the collapse of Luna in May. So because Luna basically went to zero in May and it was a stable coin, these hedge funds think that they can make easy money by shorting USDT. And when these hedge funds short USDT, it puts selling pressure on the stable coin. This is because the markets can see that a lot of the trades that are happening relating to USDT are in the short position. Not only that, these hedge funds are trying to create FUD as well. They're trying to create FUD, and they're trying to spread FUD, which is fear, uncertainty, and doubt about USDT. They're trying to create a narrative where they say that the USDT is not 100% backed. So whatever there is in the market in terms of USDT is not backed 1-to-1 with the reserves. They're claiming that Tether is issuing USDT tokens from thin air and has significant exposure to distressed companies in Chinese commercial paper. Also other narratives that I won't get into, but you get the picture. And this is all spread through troll networks, social media, such as Twitter and Reddit, in order to discredit and destabilize the stablecoin. And what their strategy is to create selling pressure for USDT, for the price of USDT to drop. And not only would they make profits from USDT dropping through their short positions, but once the price of USDT is lower than 1, they would then buy USDT in millions at a discounted rate. And once USDT goes back to $1, they can then sell it for a massive free profit. And this is the dodgy practice that they're trying to do in order to profit. And who loses is you and I, the common consumer. So we have to be aware of this and we have to fight against this. We shouldn't let USDT fall. Obviously, we shouldn't let any stablecoin fall, especially when it's due to coordinated attacks and not due to any fault of Tether. Tether even said that the company has been collaborating with regulators and has increased transparency efforts. Not only this, but they are decreasing commercial paper exposure. For example, just in the last month, commercial paper exposure fell from 45 billion to 8.4 billion. It's going to completely cut off commercial paper, because if it decreased from 45 billion to 8 billion in 1 month, then in the next few months, this number will go to 0. And also, Tether has never failed a redemption, adding that in just 48 hours, Tether redeemed around 10% of its total assets, which is something almost impossible even for banks, because banks are only obliged to keep 2.5% of all reserves in their vaults. So if everyone comes and floods in to get their money, they can only issue money out to 2.5% of the people, while Tether has redeemed around 10% of its assets, which is quite remarkable, and it shows the security in this coin. And you know, they have said that they are reducing exposure to commercial paper. I hope they can prove this by releasing a balance sheet or sort of like a statement which actually proves this, so that you and I, users of USDT, are reassured that what they're saying is actually backed by proof. And I mean, it's not only CTO of Tether that is saying that these hedge funds are engaging in short positions, but a report from Wall Street quoted Leon Marshall stating that a report from Wall Street Journal has quoted Leon Marshall, who is the head of institutional sales at Genesis, stating that there has been an increase in trades to short Tether through its brokerage platform. And these are from traditional hedge funds who are taking a look at Tether and looking to short it. So there is a lot of evidence that these hedge fund players are trying to short Tether, trying to make a short-term profit in the expense of you and I, the normal users, and on the expense of an unregulated market, which is quite dodgy and borderline illegal. So community reacts after SEC's Gary Gensler affirms Bitcoin's commodity status. So the United States Security and Exchange Commission chair, so SEC chair Gary Gensler, riled up crypto Twitter on Monday after affirming that Bitcoin is a commodity. The remarks kicked up chatter about Grayscale's application to convert its Bitcoin trust into a spot-based ETF. As you know, there is an application for Grayscale to convert Bitcoin trust into a spot-based ETF. So there is no spot-based Bitcoin ETF at the moment. And Grayscale wants to be the first one to have a spot ETF. And it seems very, very likely that this will go through, and a decision is expected from the SEC on July 6th. On July 6th, we'll be able to see whether it will be approved or not. And these remarks are positive for Bitcoin. They called it a commodity, obviously. It means that it's safer than an unregulated asset. It's safer than a security. A commodity obviously relates to gold. It relates to safer assets. So when you speak about commodity, you think of safer assets like gold. And we can directly translate this and call Bitcoin digital gold. And as I said before, it is a positive step for Bitcoin. So Michael Saylor, who is a big shot in the crypto industry, has said that Bitcoin is essential as a treasury reserve asset, which will allow governments and institutions to support it as a digital asset to grow the economy. It can be a treasury reserve asset, but not at the moment. I see where he's coming from. The statement basically means that, if you read between the lines, is that when Bitcoin is properly regulated and when we get rid of these massive price variations and fluctuations, it can be used as a treasury reserve asset beside gold and beside commercial paper. So Gensler is the second SEC chair to declare Bitcoin a commodity, and this makes it quite impossible to change this designation. And from now on, we will know Bitcoin as a commodity. On some stock market news, stocks up as China cuts quarantine. So stocks basically rose on Tuesday after China softened its strict COVID protocols, easing investor concerns about global growth. The Asia Equity Index erased losses to climb for a fourth session as bourses from Japan to mainland China to Australia advanced. So the markets in Asia are up because China basically cut in half the time new arrivals must spend in isolation in the biggest shift yet for a pandemic policy. And this is very important because we will see a slow growing US economy, but we might see a very fast growing China in 2023 coming out of its lockdowns, coming out of the pandemic. And this could pump up the global markets. It could ease pressure on prices. It could improve yields and stabilize the stock markets. And not only that, but the Chinese central bank has pledged to keep monetary policy sort of liberal and supportive to help the nation's economy. And there is a stimulus coming. It will boost credit rather than lower interest rates. And what this will do is that it will basically lead to a flood of money in the market, increase in investment, government spending, and consumption, which will cause the GDP to increase. And because China is a major global player, it will have ripple effects towards the whole world, and we might see the markets recovering in the short to medium term. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.